The Bretton Woods Agreement, signed in July 1944, birthed the International Monetary Fund, IMF, and the World Bank. Its primary aim was to establish a new international monetary order post-World War II, designed to promote stability and economic growth. One significant impact was the establishment of fixed exchange rates. Currencies were pegged to the U.S. dollar, which was convertible to gold at $35 per ounce. Businesses and governments could now engage in trade with greater assurance, knowing that currency values would remain relatively stable. The IMF was designed to monitor exchange rates and bridge temporary imbalances of payments, while the World Bank was aimed at financing reconstruction and development projects. However, the fixed exchange rate system also had its drawbacks. One primary issue was the reliance on the U.S. dollar, making the global economy susceptible to the economic policies and conditions within the United States. When the U.S. faced inflationary pressures in the late 1960s, it ultimately led to the collapse of the Bretton Woods system in 1971 as President Nixon suspended the dollar's convertibility to gold. This marked the transition to a system of floating exchange rates, ending the era of fixed exchange rates and introducing new volatility and complexity in international monetary relations. Furthermore, the Bretton Woods Agreement led to the liberalization of trade policies, fostering a more interconnected global market. By promoting currency convertibility and reducing barriers to trade, it laid the groundwork for the expansive global trade networks we see today. This increased economic interdependence has had mixed effects, contributing to economic growth in some regions, while also exposing vulnerabilities and disparities in others. In conclusion, the financial impacts of the Bretton Woods Agreement on international monetary policy were profound and multifaceted. It provided a framework for economic stability and growth in the post-war era, but also introduced challenges and dependencies that continue to evolve. As economic historians and enthusiasts delve into its legacy, they find that the lessons from Bretton Woods remain strikingly relevant to contemporary monetary policy and global economic cooperation.